Hi, I'm Connie Ramsey. I'm with Atlantic Bay Mortgage, and I am here to talk to you about some FHA loans today. So, FHA loans is a government-backed loan. Minimum credit score is 620. Who can use an FHA loan? Primary residents only. However, you can have a non-occupant co-borrower on these loan products. So if you have someone who's purchasing a home, we used to like to call them kitty condo loans, because you could have, like I have a daughter in college. I'm going to possibly purchase a home up in Harrisburg for her, put it in her name. She'll be the primary resident, and then I'll be a non-occupant co-borrower. So that's one way to get in and help the younger family members with purchasing a loan with 3.5% down. So it's a low down payment. Otherwise, I'd be having to put 25% down and purchase an investment property for her to live in. So it's a great product for young individuals, helping your family members out. It's another, the reason for the down payment of 3.5%, you can get homes into families without putting that 20% down. So a lot of times people say, do I have to put 20% down so they don't pay private mortgage insurance? Well, mortgage insurance is just to back the loan up. So we can do a 3.5% down on FHA, and the mortgage insurance is standard, 0.55, which is 55 cents per 100 on these loans. It's very affordable, low credit scores, very lenient with ratios. Debt ratios can, standard ratios 31%, which means 31% of your gross income would go to housing. Your total debt, with including your housing, would be 43%. We can go over those ratios if we get an automation approval, but if we have to do a manual underwrite, maybe some factors of credit's not so strong and the automation doesn't approve it, we have to stick to those 43% guidelines. So it's very lenient in that respect. Down payment can come from your personal savings. It can come from 401 money. It can come from gifts from family members. You can come from nonprofit organizations. You have church that's willing to give grants on those individuals, and grants from the cities. We have a lot of agencies out here in the communities: Suffolk, Portsmouth, Chesapeake, Norfolk. Virginia Beach doesn't have any, but city agencies can give grants, and that money can be used for the down payment requirement for the FHA. Virginia Housing is another huge agency out here in Virginia that has the ability to loan you a 3.5% down payment so that you could create 100% financing for your FHA loan. Now, those are for first-time home buyers to get the down payment assistance. If you're not a first-time home buyer, well, there is a product for that too. So we do have an FHA Boost, and that is a 3.5% down payment loan. It's a 10-year payback for that down payment money, but it creates 100% financing again for non-first-time home buyers. You just can't have you can't not have owning a home at the same time. So if you sold a previous residency and say you didn't make enough money for a down payment, then you could use the Boost and create still 100% financing to help you out. Can you get some seller concessions on FHA loans? Yes, you can. So you can get up to 6% if the seller's willing to give it. We hope that market comes back where sellers will start to assist some of our buyers. But at the moment, you may have a little difficulty in that. But if you can get them to pay up to 6%, that would more than enough cover their closing cost. You could also help them prepay some interest down to get a lower interest rate. So that's a very big positive on the FHA for a down payment, for concessions. Very flexible guidelines. So again, we can stretch ratios over the 43 with some compensating factors. Compensating factors would be someone getting, let's just say they're getting a child support. We're not counting in qualifying income because they don't get it regularly, but they are court ordered and they are receiving some of the funds for it. That could be compensating to take ratios a little over the mark, because we do know some money's coming extra in the household. Maybe a second job that's they haven't been working there 2 years or longer. So we can't use it for qualifying, but they are steadily receiving that money. That can be considered a compensating factor. On a job for 10 years, steady income, ratios may be a little higher, but the fact that they've been there for a long time, 10 years plus, salaried income, we know that the job stability is there. That could be a compensating factor. Money in the bank, assets. So if you have, say, $10,000 in your savings account or $5,000 in a 401, that can be a compensating factor as extra reserves over two months of the reserve. So any of those kind of things can help you qualify your buyers for more money because the ratios can go up a little higher. FHA is a wonderful product if you're looking to renovate a home. We have 203Ks, and the classification is a K. On a regular FHA, it's a 203B. But a 203K is a renovation product, and they could purchase a home, say $100,000, and they wanted to add on another room or expand the bathroom or replace kitchen cabinets, say $50,000 worth of work. That's $150,000 with only a 3.5% down payment of your $150,000. So that could get an individual in a home that they could fix up, bring it up to par if they're getting an undervalued home, and then fix it up and have everything they wanted as if it was new construction because they've renovated it and at a low down payment. And amortizing that over 30 years is better on your pocketbook than purchasing a home at $100,000 and then go and taking out a $50,000 renovation loan with short-term money with higher interest rates. So renovation loans are great tools for having homes for fixing up.
Do you have to still use foreclosed contractors for that?
We have to approve them. So on a 203K where you are doing some structural changes, you have to have two bids, two separate contractors. You can go with whatever one you want. We just have to have two for the file. And then the monies are given at closing to get them started, and then they will have draws. But they do go through a process of getting approved through Atlantic Bay or whichever lender you decide to use. Hopefully it's an Atlantic Bay. And they will approve the contractor with insurances and some other requirements to be a licensed contractor to do the work. You cannot do it yourself, and that's a good point that you mentioned, Christine, because how many of us know how to paint, right? So if you're saying, I want my whole house painted and I want to do the renovation and want to use renovation money, well, the renovation money has to go to the contractor. So you'd have to hire a painter if you wanted to be part of the contracting money. If you say, I can paint it myself, well, you can paint it yourself. It'll be on your money, not the bank's money. So it has to be professionally done, and then they have requirements of meeting the inspections to clear that, to get the monies to the contractors. Contractors won't get their final draw until the work is complete and the final inspection is completed. So they have to know when you're hiring these contractors that they know the requirements, and we instill in them the requirements that they'll have to meet and what to expect on getting those funds afterwards. So it's a really easy program. Don't ever be afraid to do a renovation. The time process, I say 45 days on contract, but we can get them closed the same amount of time, 30 days. The only reason I extend it to 45 days is that first 2 weeks, you're having to get two different contractors and getting their schedules to align up to come out to the property. However, if you do want to do the HUD consultant, I do like the consultant. If you have the HUD consultant where they come out to do the house, they do the work right up, and you only have to do one contractor on that one. And then the HUD consultant will work with the contractor, and you kind of get out of the middle of it. So that's maybe a better option. That's I usually steer to. But if you're doing non-structural, the two contractors is what you need on non-structural. So can you get an FHA loan after a bankruptcy? Yes, so it's very lenient on credit. So after 2 years of a discharge bankruptcy, you can obtain an FHA loan, credit qualifying. Hopefully the buyers have reestablished some of their credit at 620 score or higher is a 2-year waiting period. FHA is the only loan that you can actually provide a loan if they're in a bankruptcy, not a Chapter 7. So a Chapter 7 is where they totally wipe off all their debt and start fresh. A Chapter 13 is where they're in a 5-year payback period, and during that period, if they've been in the plan for at least 1 year, and then they can get court approval, which is a process, and I've only had it happen once for me, but they had already owned a home, and they sold their home and rebought a new one, and the courts approved them to get a new one, which was really surprising, I know.
What about foreclosure?
Foreclosure, so it's 3-year waiting period after you've had a foreclosure. But FHA and your government-backed loan is really going to be your only ones that you're going to be able to obtain a loan after bankruptcy in a short amount of time. And 2 years is pretty short coming out of that. But they expect after a bankruptcy to have wiped everything clean, and you're given a clean slate to show how you can establish and use credit again. So that 2-year period is so crucial for buyers to go forward. What was the other one I was going to say? Oh, on FHA, you do have a mortgage insurance that's monthly, as I was saying before, 0.55% with 3.5% down. They also charge a 1.75% upfront mortgage insurance that goes on top of the loan. So even though the rates are lower, you have an increased loan amount, or excuse me, an increased monthly payment because of the mortgage insurance that's adding on top. But if your credit scores, let's say your credit scores are mid 600s, your government-backed loan, FHA, is going to be the better product. Why? Because the mortgage insurance on a 640 for a conventional buyer is going to be double that. So you're going to want to go with the government in those cases. So when I'm looking at buyers, low credit scores to high credit score buyers, FHA is going to be winning out all day long on that fact. So there is a limit for FHA, cannot go over 690,000, and that's really, really high from when I started 30 years ago. When I started and bought my first home, it was 174,000, and I had to go conventional because my house was 182. So I was just barely over the limits. I can't go FHA, so I had to scramble to come up with 5% down. But yeah, so the 690 is a huge limit. Your conforming standard limit right now is 776,550, which is phenomenal that it's gone that high. So give you an idea of what that would run you a month on 690, $310 you'll pay just in a mortgage insurance. But you are given an opportunity to own a home with only 3.5% down. And as time goes on, we build equity in our property. That 310 can go away after you build enough equity, build scores up higher if your reason you win on FHA with a lower scores, then refinance it off of the FHA into a conventional so that you can get rid of that 310. So if you have high credit scores, and you could get them over 700 and give them 3 or 4 years to build up some equity, refinance them to a 95%, the mortgage insurance will be a lot less than 310. In a favorable market, of course, you want to refinance coming in our market right now at 5.75 and then refinance it to 7%. It's not going to make sense, right? So it has to be a favorable market, but there's opportunity. Opportunity is always for our buyers to get in how they can own a home now and what is it going to take. Yeah. Buyers don't need 20% to go down. They can put as little as 0 down first time or non-first time. You just need to figure out the program specifically for them. So let's see what else we can talk about on them.
Close period. How long are you taking to close FHA loan?
We're 100% financing, average 21 days. Yeah. I always tell people write 30 days in the contract just to allow for anything. If we get these clear to closes early, we can ask everybody if they want to move the closing date up. But 21 days is a strong average for us.
And you said minimum credit score is 620?
620. So if you're going to look at for a regular FHA, it's 620. If you're looking at any first-time homebuyer programs, it's 620. If you want to look at the renovation loans, it's 640. And then if for our non-first-time homebuyers, if they're looking for 100% financing, it's 660. So, and I just spat a lot out. So, did you have any questions on FHA loans?
When it comes up, I'll have a question.
Yeah. What? Or you can call me. Yeah, just a kind of a.
Our feet wet, right?
Yeah, just a little pointers here and there of what you can do with an FHA, and it's definitely a lenient program. Very lenient. Yeah, you're welcome.
Thank you.